All right, so coming out of the gate, I just want to let you know that this is predominantly going to be a futures index trading mentorship, okay? The idea is going to be presented in the scope of paper trading on tradingview.com. But what you're looking at here, this is Thinkorswim's live data. These are actual executions I made today. And I want you to compare and contrast with what you see on YouTube and other educators where they'll tout that they can do this and they can do that. But really, I want you to compare and contrast what you see here. All right, so we're looking at intraday price action for NASDAQ E-mini futures. And this is actually the main focus of this mentorship. I believe that this market is worth studying. I believe it is not just limited to NASDAQ, but I believe it's useful to learn as a trader that views obviously the E-mini S&P, the E-mini Dow future, and the E-mini NASDAQ. Now, E-mini NASDAQ is a little bit faster, a little bit more aggressive, and even with that, you can still trade it. So I want you to think about what it means to watch price action and understand what it's likely to do before it does it. Now, I'm not promising you're going to be able to do that right out of the gate. What I'm going to show you is the compare and contrast to how I can trade versus what I'm promising to teach you in this mentorship, how to find specific setups in your demo account. I'm not trying to entice you to trade with live funds. The teachings will be predominantly through the scope of tradingview.com's paper trading module, or just hindsight data. What you're looking at here is actually live executions from today, okay? And I want you to think about if you were able to trade a micro account and you were trading the NASDAQ, and you were able to capture just one of these moves, which one would you like to learn how to find? I want you to think about which one really stands out off the entire chart, and this is a 1-minute chart. Which one really stands out? I'll give you a moment. You can pause the video and unpause it when you're ready. Obviously, we can see how the market moves from here, okay? 2 orders executed here. Whenever you see this, this is actually a reversal. So if there is a trade on long, it'll reverse and take you the other direction. Okay, and then this one here, this is a reversal as well. And then another close, and then another long entry, the exit, a short entry, and then the cover. I'd like for you to consider what it would take for you to find consistency and how many handles, how many full handle moves in an index futures contract that would satisfy you. When I say a handle, that's essentially 4 ticks, the minimum fluctuation in these markets. An example would be if you were trading the E-mini S&P and you were trading obviously the 4450 level and you went long. If it went to 4451, that's a full handle, okay, or 4 ticks, or 4 times $12.50, or $50 per handle. The NASDAQ is $20 per handle. So it's slightly different, but it's faster. It moves a lot more handles, a lot more aggression. Now, it doesn't always move faster. Sometimes we'll have a lethargic price action in this indice or another out of the 3. That would be the S&P, the NASDAQ, and the Dow. And these 3 markets have the luxury for you that may not have the capability to put up to like $17,000 margin if you were going to trade one full contract of the NASDAQ futures. Most brokers, unless you're using a discount broker, they're going to require you to have deep pockets in the sense that you're going to have about $17,000 and about $12,500 for an E-mini S&P full futures contract. You take basically a fraction of that and you can trade a micro on each one of these markets, but obviously it reduces the number of the tick multiplier because you're trading with a lot less technically leverage. So I'm going to get into all that, but I just kind of like want to begin the conversation informally, but also just kind of like show you what it is that I do versus what other people do. So if we look at the ebb and flow of all this here, where the market's trading up, and between here and here, it's not a small number of handles. It's a pretty respectful amount of handles. It's not a couple, it's not a handful. And then up here, it's a reversal, and then it comes back down, and I buy it back here in reverse. So I'm selling short here, and I'm buying long here. 740 to 720, that's 20 handles. Going long here at 720, getting out at 732, 12 handles. Then going long here, 756, and then getting out at 784.5, then going short at 798 and covering at 675. So I'll ask you, which one of these trades do you think is the one that you want to learn? Again, putting all aside the idea that you probably want to do all of these, but I'm not promising you that, okay? I'm going to take you into how to find this setup here. Notice the number of handles. I'm not promising you to get this many handles, but the setups and the logic behind it will help you find these types of frameworks. Framework is the foundation to a trading model. So you have to have an understanding of what it is you're looking for. And that's really the only thing I'm introducing tonight is the idea of what it is I'm promising to educate you with so that way you can go in and find these setups on your own. Once you understand the rules and you go through the processes and things I'm going to teach you how to practice with, you will not need anything except for the chart itself. So if you look at this chart is clean, except for these little bubbles that actually show you the transactions. You don't really get any kind of distortion from your reading of price action. But the main takeaway here is I want you to understand that I don't hunt for 3 to 5 handles and consider that legendary, okay? Now, can you be profitable if you take high frequency trades and you do those types of trades? Absolutely, that's what algos do. Algorithms do that. But I'm trying to show you, by contrast, that there is a way that you can find setups that are outside that parameter of very small little handles and doing lots of contracts. I'm going to teach you skill sets that focus primarily on this, okay? You want to find a nice price leg intraday. I'm not promising you how to buy, sell short, buy, sell short, buy, sell short. That's mine, okay? I'm not teaching that. That's why I set the stage in the first introduction video, so that way we know what it is I'm teaching you. If any one of you here don't want to learn how to take this type of trade, you're welcome to not continue and turn this video off and go watch whoever.